Hey, Cashflow Ninjas, real quick before we jump into today's episode. I've been asked by many people recently, what has been the one thing that has made all the difference on my journey as a business owner and investor? I started businesses and I've invested in businesses. I've invested in single family real estate, multifamily real estate. I still have a sizable portfolio of multifamily real estate, historic resorts, mobile home parks, oil and gas, life settlements, gold and silver, Bitcoin and cryptocurrencies. I could go on. But the one thing that has changed the financial trajectory for myself and my family has been infinite banking. Yes, you heard that correctly. That is the number one thing I've done over the past 2 decades that have made the single biggest difference. And it's not even close. Setting up and building out a family banking system using infinite banking has enabled me to create my own financial system. This year, it has allowed me to focus and not pay attention to all the chaos in the global economy and global financial markets. I really don't pay attention to all the noise about tariffs, trade wars, markets violently going down and then going back up, or interest rates skyrocketing and wrecking real estate deals and other alternative investment deals. Do not be beholden to other systems. Create your own system. If you're interested in working with me and my team at Producers Wealth to set up your own banking system or your own business and family banking system, then go to getwealthyforsure.com. That's getwealthyforsure.com. When you go to getwealthyforsure.com, you can request a free copy of my best-selling book, Get Wealthy for Sure. Only pay for shipping. You can also watch all of our presentations and schedule a call to explore infinite banking options with me and my team. You don't have to be powerless amidst the chaos. You too can have a financial strategy that provides certainty, predictability, and clarity. You and your family can also get wealthy for sure. Go to getwealthyforsure.com to start your journey today. The world is going through changes. Changes happening at a speed that we have never seen before. This is leading to disruption, chaos, panic, fear, hysteria, and a turbulent economy and marketplace. How do you protect your wealth in a turbulent world? How do you invest for cash flow in alternative assets to escape the rat race in times of uncertainty? How do you decentralize yourself, your family, your community, your business, and your investments to become sovereign and escape the matrix? If you are looking for strategies, tactics, and techniques to escape the rat race and matrix, you are in the right place. My name is MC Laubscher, and this is Cashflow Ninja. This is Cashflow Ninja. I'm MC Laubscher. Thank you again for spending your most valuable resource, your time, with me for another episode of Cashflow Ninja. Everything Cashflow Ninja is at cashflowninja.com. That's cashflowninja.com. We've got over 1,000 podcasts, 4 books, reports, webinars, and much, much more, all at cashflowninja.com. And don't forget to subscribe to the #1 newsletter in the alternative wealth strategy and alternative asset investing space, the Wealth Dojo. You can subscribe to the Wealth Dojo by going to cashflowninja.com/subscribe. I've got a fantastic show for you today. I'm joined by Michael Mathe, friend of the show. He's been on the show a couple of times, sharing many different strategies, all the way from short-term rentals to very creative private lending strategies. Michael, it's great to see you.
Hey, great to see you, MC. Thanks for having me.
Yeah, I've been looking forward to this. Always appreciate you coming on the show. It's been a while, and you always just absolutely provide so much value to all of my listeners and viewers. So excited to get an update of what you're up to and get your insights of what's going on. We've had such a crazy start the first 6 months. I woke up this morning and I'm like, is like half the year done already? This is like insane of 2025. So here we are. We time stamped it for you, but for my listeners and viewers, and all for my newer listeners and viewers that's not familiar with you and what you're up to, can you give a little bit just of your background, share that with them, and what you
Sure.
get up to these days?
My background is really almost full-time real estate since I was in my mid-20s. So, um, and I cut my teeth in the war zone. I think a lot of people did. So I started at Section 8, in the war zones, and kind of I always say the bullets are kind of whizzing by, and that's not always been the case. But I love those because it was government subsidy. So I knew that the government was going to pay like a slot every single freaking month. And that was a good, safe place to start, even though there was kind of all the perils with that. And over the last about 25 years, I've just really upped my game, if you will. So went up to a little bit more of affordable housing and then kind of mid-range housing. And here I am now, which has been the last handful of years exclusively in the luxury market. And there's a handful of reasons for that. But we were getting a lot of demand on our YouTube channel for people that, we were talking about our personal deals, Matthew and I, and here's what we're up to. And it was always, well, how do I have access to those? How do I get involved with those? How do I find those in my own backyard? And so what we ultimately decided to do was roll out this Prefer platform for other investors to get involved in. And Prefer is just a simple acronym for passive real estate flips easy returns. This is a 100% passive investment. And we've been sharing this now openly for a couple of years for folks to get involved in that want to get, they don't want to buy the whole deal. They don't want to oversee the projects. They don't want to be the operator, if you will, but they want to get their money working for them. And this gives them that opportunity, really, really high rates of return with collateral and getting in these luxury flips, which are all right in my backyard here in Ponte Vedra Beach, Florida.
What I appreciate about you and Matthew, and just so that folks know that Michael Mathe and Matthew Pillmore, they're partners and a ton of ventures, but two individuals that you guys have been involved in so much stuff and have been successful in so many different ventures and businesses, and specifically real estate, and now partnering with your education channel on YouTube, which is a huge financial education channel called VIP Financial Education. What I love about it is on the channel you guys shared all the stuff that you're into, and eventually it rolled into being uber entrepreneurs that you are. This preferred access business sharing, and getting others to participate and get involved with whatever you guys are doing. What I also wanted to just share with folks is, one of the things that I appreciate about you, a couple of things, other than just being a fantastic guy, is that from an investor standpoint, you don't just do the same thing over and over and expect the same results. You always are cognizant of your environment, of the marketplace, and you adjust your businesses and also your real estate investing strategies. You do, however, stay in the same space, meaning the luxury space, right? Instead of, I've used this analogy that you have your Nordstrom buyers, you have your Target buyers, and you have your Walmart buyers. They all buy very similar products, but they buy differently crafted and created products, and they have different expectations of the products. You can buy a shirt at Nordstrom, you could buy it at Target, and you could buy it at Walmart. They all sell shirts. They make money selling shirts, but they sell shirts to very, very different clients and customers. Same take that you have done in your investing and your businesses operating, using that analogy, at the Nordstrom buying, right? The luxury end of things. You just want to share why that's been so attractive in all the business ventures that you've been in and why you continue to play there, other than if you know your space really, really well and your clients and your customers because you're doing it over and over. But what attracted you to you, and what made you stay at that end of the market?
So really a handful of things. So just being in some lower price point models over the years, The reality and what I've found is it's actually a lot easier to deal in the high end space than it is in lower end housing. Now, real estate is real estate. So you're always going to have kind of these moving pieces, moving parts, if you will. But when you're dealing at the high end markets, you've got a sophisticated buyer and a very sophisticated seller. So all you're doing in those instances is providing a product, especially to the buyer, that does not currently exist. So why I picked Ponte Vedra Beach, Florida, for example, is it's where I live. So we were talking offline before we got started here. Every house that I'm operating in here right now is within about a 2 to 3 mile drive for me. So as an operator, that allows me to be on site every single day, walking the projects, walking the properties, going through the design, talking to the builder and the construction team. But there is such a demand for the product that we offer, and there's just very, very little supply. So if you also look at some of the individuals' migration patterns, so there has been a mass exodus from the Northeast, particularly New York, mass exodus from California, and not to get political, but a lot of the political ideology in those areas, which is always going to include higher tax rates, especially towards businesses and higher income earning individuals, they're fed up. So if you look at populations going up in states like Florida, going up in Texas, going up in Nashville, which I consider those free states, right? So you can come in, you can do good business. You're not getting, bent over by Uncle Sam on every dollar that you make. And they're beautiful places. Where I live in Florida, on the east coast of Florida, if you take a look at the east coast all the way down to like Fort Lauderdale, I don't do real estate in Miami. It's kind of a different animal down there. But even as far as south of Fort Lauderdale, West Palm Beach, in between here and there, the population is going through the roof. If you look at some of the top hottest real estate markets right now, most of them in Florida, right? So you can go Ponte Vedra Beach, which is basically an offshoot of Jacksonville. It's about 30 minutes away, but we're right on the water here. And then go south, and you just take a look at those population spikes and take a look at where those people are coming from. They're coming from areas like New York, like New England, where they want more affordable housing. They want lower taxes, especially if they're an entrepreneur and they're a business owner. They're tired of getting pillaged again by Uncle Sam. So they're moving to areas like this, beautiful weather year round. And instead of being the snowbird that comes down here 6 months out of the year, they're moving down here full time. So really capitalizing on that niche. And then again, layering that in just to the luxury space. Additionally, it's less competition. So, DIY and HGTV and all those great cable shows, and I've watched a million of those. But ever since they came out, they make it seem like anyone with a screwdriver and a hammer is a bona fide flipper at this point. And what that has done is really, really driven up the competition on some of those lower priced houses. So where I play in my space, I'm not in bidding wars with anyone. I'm looking for great houses with a great price, with phenomenal margins once I do the scope of work, and it's all high-end luxury scope of work. Even down to like appliances in the kitchen. I spent about $80,000 on Wolf, Sub-Z, and Viking, appliances, but that's what people are looking for, especially if they want a nice gourmet kitchen. So that competition, eliminating that as opposed to going after a $2, $3, $4, $500,000 house where I'm competing with 8, 10 other investors on the exact same project, it just made a lot of sense to me. Now, typically, an investor is going to want to keep their cost basis low. So they're going to want to go after those lower price point houses and do multiples of those. Well, I can do multiples on the higher end houses as well, but I don't mind having that additional exposure on it because I'm looking at the net number at the end. So what I'm doing on every single one of these houses before I go under contract is I'm doing all the math. I'm a very, very, very proud math nerd. And I share that openly because everything I do is boiled down to dollars and cents. All boils down to, does the math? These are widgets to me. I've got zero emotional attachment to any one of them. But if I can see a house that I can buy at a particular price, I know I've got to put, most of my rehab budgets are between about 800,000 and about 1.5 million. I can put that in and I get my cost basis there, but I know I can make 2 to 2.5 million in gross profit on the back end when the project's all said and done. Obviously, it's worth it.
What are you seeing out there currently in the marketplace? Because we have covered on this show before, you and I, and you've shared how you change your strategy during a real estate market cycle, and you're doing different things now than what you did in, 2012, 2013, and 2019. So you're doing different things right now. What are you seeing in the market that you're operating in, and what are you seeing in other markets, and what is interest rates doing to real estate markets? What do you
Yeah,
see
so
in the
just
real
to
estate
kick that
landscape?
last one off, as far as interest rates go, mortgage rates, interest rates don't necessarily always go hand in hand, but for a general consumer, potential home buyer, those are things that they're looking at. The reality is, in this luxury space, I'm pretty much dealing with about 80 to 90% cash buyers. So they're coming in most cases and making all cash offers, quick closes, no contingencies on financing and things of that nature. So it's not a interest rate driven market at all. And there's going to obviously be some exceptions to it, but if you're looking at some of the more affordable housing or kind of lower price points, then you're going to run into a mortgage rate, interest rate driven market. So again, that's something I'm avoiding because these people are coming, with cash in many cases. This is not a model that's just simply repeatable anywhere USA. So there's got to be a handful of things that you're going to be looking at. Ponte Vedra Beach checks all the boxes for me. Location, check. All these houses are within a few blocks of the beach. There's a north and south highway that goes all the way through Florida called A1A. The west side of A1A is not going to be on the beach side. The east side is. I only operate on the east side of A1A. So again, strategic placement of my inventory. People want to be closer to the beaches. They're going to be more expensive, of course, but the risk is definitely worth the reward on those. So I stay east side of A1A, and every single market, and I get a lot of folks that ask me, that come from your channel, come from ours. Well, how do I do this in XYZ city, USA? And I said, well, it's, I wish it were that easy. You've got to find a place that's got really, really low supply of luxury houses, which Ponte Vedra Beach does. People here have insane amounts of money. And I didn't grow up here. I'm not a silver spoon guy. I'm not a trust fund guy. So, I made it all the way up through the through the ranks over the years, and proud to say that. But that's not necessarily the case here. People have insurmountable wealth. They don't want to buy a house. They don't want to do the rehab, wait 8, 9, 10 months, oversee a project before they can move in. They're looking for a turnkey product. So as far as the overall markets that you want to take a look at, it's going to be high household wealth. It's going to be low supply of premium luxury fully rehabbed houses, which is what we offer. I even take up these houses down at studs. I mean, I'm doing all major mechanicals on every single one of them, new HVAC, new electric, new plumbing, new roofs. So, finding something like that simply does not exist. Other markets like a Miami, for example, would not be a good fit because there's a lot of people doing it down there. It's a bigger city. Ponte Vedra Beach is uber wealthy. St. Johns County is the wealthiest county in the state of Florida, which kind of catches people's attention sometimes because you would normally think like a South Florida. St. Johns County, where Ponte Vedra Beach is the wealthiest county in Florida. So identifying tea leaves like that are going to be critical. You can't just go buy high-end houses in any market and expect to get the same results at all.
So let's talk a little bit about the business model for Prefer, and also where it fits in today, and how it's going. Because, like you said, you always adapt and change, and look at what's happening, and make adjustments. So if you could just, for folks that haven't heard this, if you could just walk it through from where you identify the property, you've kind of shared already what type of properties you're going after, where you've got a specific criteria. But I think a good place to start would be once you've identified, put it on under contract and close it. What happens next, and what does the process look like?
Yeah, and to your point again, I mean the times are always going to call for what I'm going to be doing in the real estate market. So 2010, 2011, I was buying everything I could, right? The market had been absolutely blown up. There was a fire sale. So at that time, I was coming in, I was scooping up houses for 10 cents on the dollar. That's not where we are today. So I've, over the years, obviously pivoted into this luxury market, and it's a boon. So once people get involved, and I'll just say, we do have a 50K minimum participation. I will typically put a max on the amount that they're allowed to invest. Usually it's around 250,000. The entire goal of this strategy was to give opportunity for folks, whether they're accredited or not accredited, it doesn't matter, to get involved in deals and have access to deals that they otherwise would not in their own backyard. That was the entire point of the platform. So they get their money in, and there's a handful of security measures in place. The first question I always have is, how am I protected? Period. So want to just reiterate again, it's a 100% passive. I'm the operator. I've got a couple construction companies that I oversee that are on the ground every single day. But the protection measures for every investor, and this is effectively at the most basic level, this is private lending. So they're not coming in necessarily as a investor per se, but they're lending privately on a construction project or a rehab project on a luxury home. And that's how the documentation reads. So everyone out of the gate that's involved has collateral. So a lot of folks come to us that have been in syndication deals before, and I've been in a lot of syndication deals myself. And although they can be good and you can get, kind of high teens rates of return, my issues with them have always been, and you can get burned, is you're not getting a guaranteed locked-in rate of return. It's more of a variable rate. If they sell it for more, you don't make more, but if they sell it for less, you make less, right?
Yep.
It never made sense to me. So with our model, it's a locked-in rate of return. If I sell it for more, they don't make more, but if I sell it for less, they're still at that fixed rate. Additionally, syndication does not offer collateral. So what I do is I offer a hard asset collateral piece on every single project. They're going to have a promissory note, and they're going to have a securities agreement. That securities agreement very clearly states on day one that they've got the ability to file what's called a UCC1. Effectively, what that does is cloud the title. So I can't, at the end of the project, sell it without satisfying every single fractional investor in the deal. On top of that, my rates of return are typically between about 25 and 30%. So typically, if you've got high rates of return, you've got less protection. Or if you've got low rates of return, you've got higher protection. So it kind of is that ebb and flow. And what I wanted to do as just a professional investor was balance that out. So I can still give a high rate of return and still give maximum protection to people that makes them feel comfortable getting involved in these deals. So the securities agreement, the promissory note, I'm actually personally guaranteeing the debt on each and every one of these. So I'm the maker on these documents, and I'm signing off on each and every one of them. So these people can feel very comfortable knowing that they've got recourse, right? So if you don't have recourse in investment, I've been burnt years ago by not having collateral on investments, and I stopped doing that many, many years ago after being burned a couple times. So it's about that hard collateral, it's about that recourse, and it's about the protection, which is going to come in that form of the prom note and the securities agreement, which allows them to literally file their interest online. I tell them how to do it. It's literally right there on the securities agreement. Here's how you handcuff me, right? And that blows people away sometimes. They're like, well, does that make you nervous or whatever the case may be? And I said, no, because the math makes sense. When I'm dealing in gross profit margins, typically between $2 and $3 million, and I'm only offering about 20 to 30% participation with folks. And even if I'm offering, 25, 30% on those, it's a small portion of high interest that I'm paying out on these, which allows me to scale, right? So doing about 10 to 20 deals a year, that allows me to scale and still offer back just a phenomenal rates of return to the individuals who get involved in it. And again, it's timelines under a year. Most of these are falling within about 8 to 10 months.
So about 8 to 10 months is what you're looking at. So, one of the things that I like about the strategy too is the time frame, right? You're not going out 5 years or mapping things out 10 years. You're putting money in play and then getting it out quickly as possible and turning it over and over. and you're operating in a market. That's why I spend so much time talking about the luxury market, because there's still a lot of capital on there, and you're also not relying necessarily on people buying those homes, which is fantastic. I mean, Ponte Vedra Beach is unbelievable, but a lot of them are not mortgaged, right? They're cash buyers.
Yeah, that's correct. So, my typical exit prices here. So, the first one, so I came on your podcast at the end of last year, end of 2024. And the first project that I rolled out to individuals that had seen that initial podcast is just coming to fruition. So it actually just finished up last week and is hitting the market right now at 3.49 million. And I consider that's kind of like affordable housing here, which makes people just crack up because that's a lot of freaking money. I don't care who you are, $3.4
Yep.
million, is a lot of money. But the other exits I've got here on active projects are 5, 6, 7, $8 million. Additionally, what I do on my end is I don't speculate. So I think speculative real estate is an absolute death sentence for yourself. People say, well, I think that it's going to do this, or I believe this is going to happen, or, I really feel like I'm going to be able to get this, sale price at the end of it. I bring in a third party appraiser, someone that has no relationship with me whatsoever. And all I do is I give them the scope of work. So we've got design books that we put together on these projects. Most of them are like 60 to 80 pages long. It's literally all the way down to the fixtures, doorknobs, cabinets, all of the extremely granular things, but the really high end finishes are what's critical to this. So again, I touched on the appliance package alone, $70,000, $80,000, $90,000 depending. I've got a house right now that I'm putting in about $250,000 in marble flooring on. So I don't skimp. But what I do is I give that design book to, again, that third party appraiser and say, here's what I'm going to do. Here's the entire scope of work. They find their own comps, and then they come back and spit out a number to me, and I use that to reverse engineer my math. So I need to come in at a buy price just to share my formula. So my buy price plus my rehab cost needs to be about 65% or less than what my ultimate exit price is going to be. I know if I stick to that math, which I don't deviate, if it's 1 or 2 points higher than that, I pass on the deal. It's kind of that conveyor belt mentality. Again, zero emotion on any of these, but I know if that math works, and I know I've got great builders that are going to achieve that kind of design vision on it, I'm not going to have issues on the back end. So leaving out that speculative nature, which I freaking hate about real estate, that's where people get destroyed. That's okay. They might even get an appraisal. Well, I think that appraiser's wrong. I think it's going to be, 500,000 more than that, or whatever the case may be. I've seen that movie so many times, and I've got some folks that I do kind of in a mentoring capacity, just like you, and just kind of walk through deals and talk through deals with them. And I don't deviate from that. The math has to math. I'm not trying to stick a square peg into a round hole, and at the end of the day, it's got to fit my formula. So that's what keeps me sleeping at night. That's what helps keep my fractional private lenders sleeping at night on these. And I believe in full transparency. So when I put a deal together, and your folks have seen it, I put a pro forma together that literally outlines every single bit of math, every line item expense that I'm paying into a particular project. They've got eyes on it, so they can see the margins, right? So they're saying, okay, well, how are you offering 28, 29% rates of return? Okay, well, here's how. So that transparency makes, again, people feel very, very comfortable, on top of me being the operator.
So Michael, how does this go wrong? What are the risks that you have to manage in the strategy, and maybe some of the risks have changed since the last time we talked about it, because the environment has changed a little bit.
Yeah, so anyone that says they can read a real estate market 18 to 24 months out is lying. So what I do is I'm an absolute, I analyze data literally every single day. I have access to a bunch of market reports. I know you're a market report junkie as well. And so I analyze that data all the time. If I can project 12 months out, though, I'm satisfied, because again, these projects are not years long projects. So I am always I'm always willing to pivot. And I think a big mistake that a lot of people have made, and I've seen them make in real estate, is it's like I'm trying to do the same exact thing with minimal results or no results. But if I do it one more time, this is going to be the winner, right? So I'm not naive to the fact that markets are always going to change. So I think reading the tea leaves, reading the market reports, analyzing data, looking at the trends. So like migration trends, most investors are not looking at that. They're not saying, okay, well, we had 1,500 more people move down here within 10 miles of the location where I'm doing these projects right now. Those are all factors that I consider every single day. And I utilize that in my formula, period.
Michael, another thing that I was just thinking about too, what is your communication like with your team, with investors, with all those type of folks? Because I think the reason why I'm asking this is there's a lot of people that have been listening to my show that have invested in syndications, and over the past, I would say 2 to 3 years, a lot of those syndications have not worked out as they anticipated. And one of the number one thing that I've heard, and just talking to a lot of people in my community and networks and so forth, is how communication has not been as anticipated or expected, and is when things don't go well, people just kind of disappear. So maybe you can just comment on that and just share, your process.
Yeah, 100%. And we always had that in mind when we put this model together from the outset. I think communication is just, it seems like such an elementary thing, right? And you almost just assume it's going to happen, but most cases it doesn't, So to your point, when it gets, kind of the down and dirty and things aren't going perfectly, it's like people tend to clam up and they're not communicating at that point, which creates kind of that frenzy and kind of that frantic mentality. So what we do first and foremost is I give the down and dirty, right? So it's real estate. It's never going to go perfectly. But what I do is I communicate weekly. Everyone's got my cell phone. Everyone's got my email. They've got our website, which is preferaccess.com. It's got all the projects on there. It's got all the math on there if they forget it. It's got all the rehab details if they don't remember those as well. And what we also do is put video on there. So every Friday, I put out an email that gives project updates on all active projects. So what I do is I put together an email without fail every single Friday. A lot of it's going to have walk and talk videos. I'm going through the projects. Here's what's going on. So they're seeing with their own eyes. I'm cognizant of the fact that most investors don't live in Ponte Vedra Beach. They're living all over areas of the country. That being said, we do have exceptions. I've got investors time and time again that want to come into town. They want to kind of see the lay of the land, the allure of a place like Ponte Vedra Beach. And it's kind of funny. Almost every single one of them that has come in ultimately has plans to wind up living here. So it's like, it's one of those areas, and I know you've been here in Old Ponte Vedra. It's just, that's the Beverly Hills, of Northeast Florida for sure. But it's just one of those cities that just resonates with a lot of people. Nice, quaint, affluent beach town, but most people don't come in and see them. So what I do is I'll put together those extensive emails every single week, project details, walkthrough videos. I'll do a walk and talk. So from one week to the next, they're never going to have to wonder what's going on with their project or any of the others. And then what we'll do is we'll slice that full length video, and they're usually 10 to 15 minutes long, into tiny segments based on each individual project. And then those will get placed thumbnails on the preferraccess.com website underneath each specific project. So you can click on your project, you can say, okay, well, here's 10 videos here. Here was when they bought it. Here was, kind of the chronology of the rehab process. And so it's really interactive, and people love that.
Michael, this has been awesome just to catch up, my friend. Where can folks follow you? Where can they reach out, or where's a good contact point for them just to see, follow you and just be informed, stay informed of all the many projects that you're involved with?
Yeah, so the easiest way to get it on board and get involved. So joining the database, you simply go to www.preferaccess.com. There's going to be a contact form on there where you can submit your information. That gets you in bed, right? So at that point, you're going to see every deal moving forward. You're going to see the project updates every single Friday. And you're in the game. Right now, it's kind of a unique situation and kind of perfect timing for our video today. Because I do have an active project right now that these folks that are watching right now that maybe have been on the sidelines or they're seeing this model for the first time, they can get in and get their money working for them right now. So I've got a closing coming up at the end of July. The contact form is filled out. I personally call every single one of these individuals. I don't have some assistant doing it. It's certainly not, AI making the phone calls. I've got a conversation with them and a detailed conversation, and I'm basically just trying to figure out what are their goals, right? And what's their investment background, and just kind of holding their hand and walking them through the process. But right now, I've got a deal that's literally 29% cash on cash, and this is about an 8-month project. If I could hit my driver a little bit further, I'd be able to hit it with my driver, but I can drive to the house in my car in about a minute. So again, right around the corner, 29% cash on cash rate of return and approximately 8 months. So it all starts with getting in the database, being a part of that communication network where you're seeing all of that. You've got access to new deals, and we call it the Hunger Games affectionately, because it's first come, first serve. So when we send them out to the database, the first people that respond to it for X amount of capital until that raise is filled have that opportunity. Once that has been filled, that's it. So it's really need to act fast if they like the rates of return and they want to start getting involved, which is, again, perfect timing for our video today, because we do have an active project. And that's not always the case. I mean, I might buy 1 a month, I might buy 2 a month, I might buy 0 in a month or in 2 months, because if the math does not work, again, I'm not trying to jam a deal.
Yeah, absolutely. Michael, thank you so much for coming on the show again and just sharing your journey and your knowledge and just providing so much value for all of my listeners and viewers.
MC, you're a just absolute class act. I love popping on here from time to time, and your folks are just first class also.
And thank you to all of my listeners and my viewers for again spending your most valuable resource, your time, once again with me on the show. Everything Cashflow Ninja is at cashflowninja.com. That's cashflowninja.com. There's over 1,000 podcast episodes. We've got 4 books, reports, webinars, and much, much more, all at cashflowninja.com. And don't forget to subscribe to the #1 newsletter in the alternative wealth strategy and alternative asset investing space, the Wealth Dojo. You can subscribe to the Wealth Dojo by going to cashflowninja.com/subscribe. Until next time, live infinitely. This presentation is for educational and informational purposes only. The information being presented and considered does not consider your particular financial objectives or situation, and it does not make personalized recommendations. This material is not intended to replace the advice of a qualified tax and legal advisor or other qualified professionals, and you should not use the information in place of a customized consultation with a licensed professional regarding your specific personal financial objectives, situation, and needs. We believe the information provided is reliable, but we do not guarantee its accuracy, timeliness, or completeness.